Inflation and jobs, the data is battling it out. That's our topic for today's Backstage Pass. Well, hey friends, welcome to the month of December. I've been traveling this week, so we have got a lot to cover in today's Backstage Pass. Let's start right away in the markets. Stocks are mixed so far this morning. The Dow's down, NASDAQ is up a little bit, but mortgage bonds are down. Mortgage bonds are down about 65 basis points at the time of recording. The 10-year yield is up about 5 basis points, trading at around 3.62% at the time of recording. The national average for a conventional 30-year fixed rate mortgage, well, yesterday that ended the day at 6.29%, but based on what bonds are doing today, we do expect that to tick back up just a little bit today. And look, bonds have had a lot of movement the entire week. We'll start out with Monday and Tuesday, heading into Wednesday through the home price data and everything. Bonds stayed pretty stable. But on Wednesday, the chairman of the Federal Reserve Bank, Jerome Powell, he came out and he gave a speech, and he basically said, hey, we think that we can start slowing down the pace of interest rate hikes starting at this next meeting, which happens on December 14th. So basically the way the markets took that is it kind of solidified a prevailing thought in the market that the next rate hike is going to be 50 basis points. Now, that kind of echoed some of the other things that some of the other presidents of the other chair of banks have said. So, the Federal Reserve is kind of saying, hey, we're going to start slowing things down. Now, he still tried to set a tough tone, okay? He still tried to say, hey, there's more work to be done, and the Fed fund rate, the final Fed funds rate, well, that's going to end up higher than we initially thought. But it was clearly on Wednesday a change in the tone that had been previously. So that actually produced a positive result in the bond market. Actually, on Wednesday, after that speech, bonds rallied. Bonds were up on the day on Wednesday, 64 basis points. The 10-year yield had dropped 12 basis points on Wednesday. So a lot of movement, and that's why we saw mortgage rates on that 30-year fixed come down and in the day on Thursday. Now, Thursday, the first day of December, Thursday, there was PCE data came out. PCE data was basically in line with what was expected. So not a lot of movement there on the PCE data. Just it kind of solidified what the rally that the bonds had taken and done on Wednesday. We also got initial jobless claims, and those jobless claims kind of supported that rally a little bit. Fast forward all the way to this morning. This morning, the BLS jobs data came out, and it came out much higher than expected. Today, 263,000 jobs created in the month of November. The expectation was only 200,000. And then we also saw the unemployment rate. Unemployment rate stayed the same, 3.7% month over month. So that stayed steady. But the thing that we did see also, that was wage earner growth. Wage earner growth month over month was about 0.3%, and year over year we're at about 3.9%. Now, this big beat in jobs data really kind of flies in the face of what Chairman Powell was trying to say on Wednesday. Not only did the headline data is much stronger than expected, but the wage growth, that wage growth was very, very strong, and that's what was probably the most damaging. Why damaging? Because a part of Jerome Powell's speech on Wednesday was all about wage growth, and after that speech, that's when we saw that bond movement for the positive, the mortgage bond movement for the positive. As a result of this data today, well, we see the mortgage bonds giving back most of those gains that we saw on Thursday and tied it all back over into mortgage rates. That's why we expect mortgage rates to tick up just a little bit today. Now, this really brings into sharp focus the CPI data, the next inflation report. This is CPI data for the month of November. It's going to be released on December 13th. Really brings this into sharp focus because if we get CPI data, inflation data that still shows a declining inflation, we'll start to see a trend line, which is going to be good for bonds. But really the truth of it is right now, jobs and inflation, the data, they're battling each other right now. And what's tricky for the Fed is that both of those items are part of their mandate to promote maximum employment and stable prices. Now, that's all the news that we have for today. I hope you've had a great week. I hope you have a wonderful weekend. Remember to stay positive, and we'll see you on Monday.